Welcome everyone to the Akambo Investment Series. My name's Anthony Kapitanovich and I'm the Managing Director of Akambo Private Wealth. I'm joined today by our Chief Investment Officer Chris Willerton, and today we'll be chatting about the investment themes that dominated 2013 and also looking ahead to 2014. Hi Chris.
Hello Anthony.
Chris, 2013 was a very strong year for share markets in particular, but going into the new year we seem to be seeing a lot of mixed messages from the world economies. What does this mean for the share market for 2014?
Well, you're right, 2013 was a very strong year. We saw the US share market up 29.5%. The German share market was up 25%. They're both up near record highs despite the global slowdown that we've seen over the past 6 years. We saw the Japanese share market up 57%, although they're still about 57% below their all-time high. The UK was up 14% and they're up near their all-time highs as well. Australia was up 15%, so that's a very solid year. So we've had a few reasonable years on the Australian share market. I guess there's a few issues that we're still confronted with over the next 12 months. And I think most expectations for 2014 are that we'll see a strong year, although perhaps not quite as strong as we saw last year. Overwhelmingly the biggest issue driving markets last year was the US government's loose monetary policy, or the quantitative easing and low interest rates that we've seen, and the issue of slowing some of that stimulus over the next 12 months is probably the thing that is making most investors a little bit cautious about in 2014.
So Chris, what were some of the better investment themes of 2013 and more importantly, where we'll be looking for opportunities in 2014?
I think a big factor in addressing that has been the performance of the Australian dollar over the last 12 months. It started the year in 2013 at $1.04 against the US dollar and finished the year at close to 89 cents. So that's obviously a significant fall. And the way we've played that is by investing in a lot of international earners, Australian companies listed on the Australian stock market that derive a significant portion of their earnings from offshore, particularly in the US. And we've looked at companies, we've invested in companies such as Amcor, Ansell, Computershare, some notable healthcare companies such as CSL and Sonic Healthcare also derive a lot of their revenues from offshore. So that's been a significant theme for us. Another big international opportunity has been investing directly in overseas markets, whether that is through exchange-traded funds or whether international stocks directly. We've had some great returns on the likes of Facebook, Apple, Novartis. So I think you'll see a continuation of that theme this year, whereby investors are chasing Australian foreign earners of foreign dollars, as well as a big surge towards Australian investors looking at international opportunities. We saw banks put in a very strong year last year as well. The high dividends on banks were very appealing to a lot of investors in an environment where interest rates have come down quite a bit. We also saw some strong profit results from the banks. Resource stocks were also a big feature in the second half of last year. And we've seen in the last week, we've seen BHP and Rio Tinto bring out some production figures that have been very impressive, and we think that points towards a very solid outlook for them for 2014.
You just mentioned the strong performance of the Australian banks, and obviously they make up a big part of a typical investment portfolio. We're likely to see more upside there?
Well, as I said, I think the main driver behind that has been the very strong dividend yields that the banks always provide. I mean, when you factor in the franking credits there, you're talking about some dividend yields of close to 7%. And when you've got cash rates down at 2.5%, clearly there's a big incentive to be investing in large banks. The fact that they're big, reputable businesses that are perceived as being very safe obviously enhances that appeal. We've also seen a strong increase in Australian property prices over the past 12 months, 10% across the country. A significant portion of bank revenues are derived from residential mortgages. So the fact that the quality of their underlying assets has improved because the bank or the share price, the property prices have gone up, once again enhances the appeal of banks.
So what are the big risks for the year ahead, and more importantly, where do you see the opportunities?
Look, without a doubt, it's going to be the speed at which the US Federal Reserve Bank reduces the stimulus that's being pumped into the US economy, is going to have a massive impact on market sentiment and global investment confidence. We started to see some jitters come through in the middle of last year at the prospect of that stimulus being removed or tapered, and we've seen the Federal Reserve commence a reduction in that stimulus just before Christmas. We expect to see that stimulus gradually be removed over the next 12 months. And I think that markets are going to be quite attentive to how sensitive some of the economic data is to that reduction in stimulus.
The Chinese economy continues to play a significant part in the Australian economy and the Australian markets. What risks do you see there?
Oh, look, China's been growing at breakneck speeds for quite a few years now. The slowdown that we've seen over the last couple of years has been quite healthy in many ways. And certainly over the past 12 months, it's been very much orchestrated by the Chinese government. I think that we've come to rely in Australia very much on the strong demand from China. Recent data, as I mentioned before, over the last couple of months has been a little bit more subdued than what we saw for most of the second half of last year. If that trend continues and the Chinese economy does slow too quickly, I think that might send a few ripples through the Australian market and the Australian economy. So that certainly does present a risk for us. I think the Eurozone is still a big risk for the world economy. We've got very anemic growth coming from that region. And in fact, there's still a number of countries in recession there in Europe. So I think that's certainly a big risk for the coming 12 months. There's a lot of talk of the prospects for inflation coming through in the world economy over the next couple of years, given the extremely low interest rates. But in Europe especially, there's a lot more talk about deflation, given that the inflation rate is not too far from zero in many countries. So that's certainly a big concern for us.
And the Australian economy?
The fact that the Australian dollar has come down over the last 12 months is certainly going to help. We found ourselves in a situation last year where Australia had become reasonably uncompetitive. Labour costs are too high. We find that a lot of companies are struggling because Australian consumers are more inclined to be buying a lot of things online and importing from offshore because of the purchasing power of the Australian dollar. We also find that a lot of Australian businesses are more inclined to outsource to offshore companies because it's so much cheaper to do so many facets of manufacturing and other services offshore. So that's been a big factor. The fact that it's down around the 87 to 89 cent mark now is a good thing for many companies, so that's certainly going to help. Unemployment rate's up at 5.8%. That's going to be a closely watched indicator in the next 12 months. We've seen a lot of big layoffs and a lot of high-profile job layoffs over the past 12 months. We've seen Qantas lay off many people. The recent announcement also of Holden shutting down production in Australia is going to mean the loss of many jobs. We've also seen the banks lay off thousands of people between them, and also large resource companies aren't employing at the rate they used to. In fact, they have laid off quite a few people over the last 12 months. So unemployment will continue to increase over the next 12 months. So I see that as being a bit of an issue. The risk that translates into is that we see significantly higher unemployment, which feeds into a weaker demand for property and therefore has an impact on property prices. Because that could then mean that we see a little bit more mortgage distress, which isn't a good thing for banks. It could also mean that we see weaker housing construction activity, which I guess the Reserve Bank is relying on the housing sector to pick up the slack somewhat from the resource sector, which has been driving the economy over the last few years. And the housing sector, the housing construction sector, could potentially be a big employer and a big driver of economic activity in Australia. So if that starts to slow, that won't be a great thing for Australia. I think as far as the opportunities go, we're going to see a continuation of many of the positive themes we saw last year, particularly with a lot of offshore investing from Australians, and I think also the Australian businesses that derive significant amounts of revenue from overseas are also going to be in demand this year. So I think that the currency and therefore the international investing theme is going to be strong. I also think sectors such as healthcare will be quite strong. We have an ageing population in Australia and certainly many other countries around the world too. And we've got some very prominent healthcare businesses here that I think will benefit from that trend that we're seeing. I also think that the resource sector offers a lot of potential too. The fact that companies such as BHP and Rio won't be spending anywhere near as much on large capital projects means that they'll have more money to channel back to shareholders by way of dividends, share buybacks, etc. Over the past few years, they've significantly expanded their production capacity, and I think that we'll now start to see some of the fruits of that flow back to some shareholders of those companies.
Well, thanks, Chris. So I guess my read from that is that we're quite optimistic about the year ahead, but obviously very alert to the hurdles that may present themselves throughout the next 12 months.
Yeah, I think that's a fair summary.
Thanks, Chris.
It's a pleasure.
I hope you've all enjoyed this first investment forum for 2014. On behalf of everyone here at Akambo Private Wealth, our partner groups and all of our associates, I wish everyone a very safe and happy 2014 and hope to see many of you in the year to come. Thank you.